All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for Monday night, October 23rd, 2023. We'll start with the 30-minute hybrid swing trading portfolio review, beginning as always with Alcoa. Where did my annotation bar go? Oh, there it is. All right, so this is Alcoa, 30-minute bars. Today there was that little morning hook, a gap down morning hook. I'm experimenting with that entry where we have a morning hook, and this would have been the exit on a short. Is at the skin of the dragon, so I'm front running the PSAR flip a little bit. It hits the Bollinger Band mean, then fails. So take about a 0.3 win, and happy with that. AI. Also a gap down. This one comes through the dragon. That's like a 1, 2, 3 entry, standard risk. It gets through the Bollinger Band mean, and then when that rolls over, I take a fraction. So that one's also about 0.3. So just no follow through, and I don't stick around because I don't believe in it. Amazon, same. Or no, that was Amazon. This one is the 1, 2, 3, but this one actually flips the PSAR. And we get a 4 out of that when it comes back and hits. It crosses the Bollinger Band mean. It gets to the summer right here, but then it fails. And then as that comes back to the edge of the dragon, I take the dragon exit for +1. Cat, no trade. I was... 5 years ago, I might have been tempted by that one because you have that long sideways channel, and then it collapses in the last hour. I don't know. I don't know what that means. I don't think it has any. It has no significance to me, other than just gets my attention. Cliff, this is a Kata 2, a 1, 2, 3 entry. It also goes nowhere for about 0.3. CVS yesterday, or Friday, when I say yesterday, I mean Friday, that was a Kata 2 to the short side. It was front running the collapsing dragon. It closed very poorly. Today it gapped down. I was just monitoring this. It continued to grind sideways. The PSAR remained intact. The dragon was still sloping downward. The Bollinger Band mean is sloping downward. And because we only have one position in this thing, we're well in the money. 1, 2, 3, 3.5. And today's weak closing in the S&P leads me to believe there may be some more downside to this. It basically got into the spring and then started to reject. So that could lead to a winter, spring, winter pattern, which is important to exploit to the downside. So we're close to that thing collapsing. And there's no compelling reason for it to gain. It's not like a tech play at all. Disney, I covered the short from Friday. Here it gapped down, sold off, and then resumed. So when it crossed the VWAP, I just collected that. 1, 2, 3, 4. And I looked at this as a 1, 2, 3 potential. I had plenty of other things going on at that time. And so it ended up missing another one of those routine plays. Oh, I like, MP asked me, it feels like a perfect CD, but it's span of control. If I go back and look at Caterpillar, I don't have any money in hand and a trade in the last hour has no significance for tomorrow. I like the short because the PSAR flipped, but there's no money in hand, and it actually resisted the sell-off better than most of the other companies in the Dow. So that's actually 3 days in a row where the downward pressure has resisted the urge to sell off. So if there's any kind of strength tomorrow on turnaround Tuesday, this could have just been the fake one go to. So I don't want to hold an overnight short on a great American company when the market is horribly oversold when I don't have any money in hand. There's no that's asking me to predict, and I'm not going to make a prediction without a large buffer of market's money in hand on that little pattern. That's a 2 bar pattern. There's no harsh winter. That's not really a great collapsing dragon. I mean, unless if you just say there's no buying pressure. I mean, that's reasonable, but it's not a collapsing dragon. I guess it kind of there's the RL10, but I you're making me make a case for why I want to trade it, and I don't have a bias to want to trade it. I only like trading the things that I am compelled to take because I can't stand not taking them. This one excites no passion on me. This is the absence of being in play. And if it fails tomorrow, that's easy to get in tomorrow. So why do I want to take any overnight risk? There's no without any protection. That's the opposite of my edge. My edge is being able to identify opportunities earlier in the day, make some money on them, and then decide to carry it overnight. All right, back to so Disney. So Disney was a short, which we covered. I considered the 1, 2, 3 entry on the PSAR flip, didn't take it. I was fully committed already, and so we ended up missing what would probably have been about an R, just like the other ones that we did take. So there's no regrets on that one. Dish Network, on the other hand. Now, if you were going to ask me to make a case for something that I want to hold overnight, here's one. So this is Dish Network. And today, this fake one go to, there's a collapsing dragon on the dragon and breaking the VWAP, which means I don't have to get the position in here or here on the formal collapsing dragon because I already have that much money in hand. And that thing just collapses all day and finishes here. And now I'm holding 1, 2, 3, plus 4R. There's a real reason why tomorrow that thing could start to collapse tomorrow. And that is everybody that owned Dish Network that was buying it in here comes home and they see, oh my goodness, my favorite Dish Network just collapsed. I got to hurry up and sell. So there's going to be a bunch of sell orders flooding the market, which is going to drive this thing to gap down, in which case I get paid immediately. So that's a reason to want to hold it overnight, because there is some chance, a non-zero chance that there's a gap down tomorrow. In Caterpillar, there was nothing like that. That was not a bad chart pattern. If anything, the chart pattern in Caterpillar was strong. So if there's any gap tomorrow in Caterpillar, if I had to bet, I'd bet it would be up. But fortunately, I don't have to bet. Devon Energy, just pure sideways channel. This is failure to fail further, so this now becomes a critical state for tomorrow, and I want to follow price wherever it goes. I don't need to take that position ahead of time. If it's not necessary to make a decision, it is necessary to not make a decision. Wait until the proper time. Make money by sitting on your hands. All right, this is Electronic Arts, covered the short after the R10 rolled over. That gives us about 3R. And observing this, now this also began to collapse again at the end of the day. That's a more likely candidate for weakness tomorrow rather than Caterpillar. Emerging markets, it was a big gap down, morning hook, standard entry, 3R, and a dragon exit. ETHE, gap up, cleared everything. This was the strongest symbol in our stack, and it closed very well, and we got an R in hand, and has cleared resistance, so that's one I'll hold overnight. Mexico, morning hook, 1, 2, 3 entry, dragon exit for 2R. Brazil, this is one where the large sell-off, the river is sloping down, the dragon is rolling over. We had price break through the bottom of the dragon. I speculated on it. It closed really poorly. I decided to hold that one rather than cashing 1R. So I've got plus 1R in hand. It's going to test this tomorrow. This is a chance to collapse, and I'm willing to bet the R in hand on that one. Intel, so and this was another one of the 1, 2, 3 entries. Really did nothing, so scratch. And then collapsing dragon. And then it just, the bottom dropped out of it. This was not a persuasive rebound. So we're holding 1, 2, 3R. So I have a 3R cushion on a single position on something that the bottom fell out of. So that's a candidate tomorrow for some more pain and suffering. IP, this was just a grinding, collapsing dragon, and it closed very poorly. So here's one where there was no buying pressure whatsoever all day, and then in the last hour it fell from here to there. So that's one that I'm willing to hold with 4R in hand, because that could lead to a gap down, and it hasn't even left the Red River yet. So this could be an accelerated loss in IP tomorrow. Late afternoon collapse in IYR. No trade for me, though. Coke. I took the collapsing dragon. The bottom of that one fell out. Now, here's a case. So, if you just compare CAT versus KO, this is one that I want to hold. It's rolled over. The R10 failed, so there was a collapsing dragon 90 minutes into the session. That thing was a cascading failure and closed at the low of the day. And that thing is already below this, so this is an additional collapsing dragon. And I've got 1, 2, 3R in hand, so I have a cushion for tomorrow, and I'm ready to add a second position if this starts to collapse further, because the next support level is not even in sight yet. And the river just started to turn. So this is early days in the collapse of Coke. So that's the argument to hold that overnight. Commercial real estate. This one broke. This is what I'm speculating on, a 2-day sideways chop after 2 harsh sell-offs. It failed short of the river, gave me an RLXD, a PSAR flip, so I tried it. I'm monitoring it in the last half hour, and it was closing poorly, and it's already below, making a new 10-day and 30-day low. So that's one that I'm willing to hold with 2R in hand for those reasons. That's regional banks. Mattel. Mattel is, again, making new 30-day and 10-day lows today. I have one position in from Friday, which is 1, 2, 3, 4, 5. This one is plus 5. The second position we put on the second collapsing dragon is plus 1. So we're 6R in hand. And that thing looks like a runaway freight train and is just starting to go into the winter on MACD. That's one that I'll hold overnight. McDonald's tried the collapsing dragon short. It didn't fail, so collapse. Cash for a scratch. Microsoft, I tried the Kata 2 long and scratch. Oh, I'm sorry, that was Merck. My bad. Microsoft, the SSC and Kata 2 action here, and that returned 2R. Had no interest in holding it longer term because the R10 had rolled over at a lower high than a previous one. So this looks just like a 2R gain and no overnight risk. Marijuana, no trade. NVIDIA, Kata 2 entry. This was like Microsoft, but it showed more strength. So we're holding 2R overnight on the long side. I needed something to offset some of those short positions. Lost money on clean energy today. I stuck around too long. I stayed as long as I could, but it just had no traction. I was just lazy and sloppy on that one. So minus half R. Rivian +1 on a SSC and then a Dragon exit. You notice that the S&P basically gave us an SSC entry, which got to the Bollinger Band mean and then failed. And that's what most of the things did today. Treasuries, on the other hand, there was a Kata 2 entry, which I did not take. Then when it moved 2R ahead, I decided to hold my nose and buy it, then took the Dragon exit for about half an hour. Tesla, I tried the 1, 2, 3 long, no traction, scratch trade. U.S. Steel, tried the SSC, no traction, minus half an hour. So mostly short positions. I think there were 4, maybe 5 positions long. Every one of them has significant buffer of markets money. So we'll see what happens tomorrow. All right, here is the sniper trade of the day. Come on, pen. So we have Friday's close to here. Then a gap down to here. That's the close Friday. Gaps down to here. Then gives me an OR3. So this is on 3-minute charts. Sniper trade of the day. The second bar was an inside bar. The third bar breaks below the low of the OR3. So I get short here with a standard risk box. Check or hold. Basically a scratch trade. It does not follow through. You know, it gave me 1, 2, 3. Now there's a higher low, another higher low. That's basically a 1, 2, 3 exit, just short of the entry. So basically a scratch. Not a loss. It gives me a PSAR flip, and then there's a standard entry and standard risk. So we're long from here. I notice the Bollinger Band mean. So it's getting ready to cross the river. That feels like a morning hook. And this was Friday's VWAP. So this is the tactical space right here. If it gets above Friday's VWAP, then that's going to be a good sign. So in the tactical space, the only thing that I'm trying to do is to get my risk out so that I could lock in some kind of gain like that. I'm hoping to see price get up into this space. As it's testing the VWAP, I should be able to get my stop up into here. Is my only intention. That's what my fireman is doing. Now, 2 bars into that trade, what should I be doing? Price has moved from here to there. It has cleared the VWAP. My stop should be probably here. If I want to give it some room to run, I can at least put the no lose plus dinner for 2 stop in. That's stop number 1. If I go to a 1 bar low and call that stop number 2, then I will have locked in, about 1R. So this is a no lose plus dinner for 2 stop. This one is a plus 1R stop. That means that my open gain is about 1.5 execution R in hand. So I should know what my average win is to decide if I want to lock in no lose plus 1, or maybe even further up in here, something like that. So if that's you, where do you put your stop? 1, 2, or 3? Commit. And then if my 2R battle drill would probably be up right around in here. So what you can see then is that in this region, right around 2R, you have a tension. There is a tension in you between preserving the gain and looking to scale. Or you could just say, hey, leave it alone and let the one position go. So that's what the 2R battle drill is always reminding you to do, is to have that standard decision making already rehearsed in your mind. What makes this one special is how fast it got to almost 2R. It was a matter of 2 bars. So for me, this is one where I like the 1 bar low right here. I like locking in plus 1R, and then I'll think about adding a second position up in here. But there was already some weakness in some other symbols I'm tracking. Now, right around here, I can be thinking, all right, we've had 1, 2, 3, 4, 5 bars. It hasn't made a new low, but it hasn't really moved higher. It's right around 2R. The R10 has rolled over. I could seriously think about just taking that one as a dragon. Or I could leave my stop at 1R. I could move to the southern skin, the spine, or I could take it. All right, so by show of hands, where is your stop? 1, 2, or 3, or do you take profit at this location? I mean, that's a good problem to have, right? That should also be a routine action where you get to the 2R battle drill and then it stalls, and then you got to decide how much to give back. Now this feels like that R10 wiggle. It could not penetrate the skin of the dragon. If you were the guy that cashed right here, then part of the 2R battle drill is saying, what price do I have to see to re-enter? If you had gotten out here, then that is a good re-entry. If this did not get you out, then that's a good place now for the 2R battle drill, which in this case is 1, 2, 3. It's basically 3R. So again, good problem to have. That's very useful for understanding. And now, the next 3 bars, you could sort of just keep a 1 bar low because you've got 2 positions in. You have an abnormally good gain, so you don't want to give back. Remember, every reversal is you're losing money on 2 positions. So that's why, to me, the 1 bar low is reasonable. I wouldn't even be offended by being right there. And I thought I played this one poorly. In my notes, this is where I should have been out. If I can do even if I have no lose plus dinner for 2 on this one, I should be getting out somewhere in this region. So that's bad form on my exit. I end up taking basically the PSAR exit after a moment of almost justification, thinking, God dang it. Get that stupid thing. So there was a moment of joy, and then when it rolled over a second time with a lower high, and now the R10 is in the river, that's lucky to get out there. And so even with sometimes you get lucky. And the first position, come on. First position is 1, 2, 3, 4, 5R. Second position is about 1R. So that's a total of about 6R across the 2 positions. And just, I didn't play that one very well. I like this entry. I should have been out here. It doesn't make that much of a difference, but this would have been better for more respectful of capital. What would we call that re-entry? Yeah, I mean, I think of this as a kata 2, and this is so close here. Yeah, it's basically an ED kata 2 kind of combo. You got the standard wrist box. Off we go. Standard work. Should be at no lose plus dinner for 2. Probably using the PSAR dot. R10 rolls over, so reasonable exit. If you get out when it hits the PSAR dot, no significant difference. It preserves some of the capital. I like to see the R10 roll over. I think I should have been out here. But this was like the strongest stock in the sector. So it gets another 2R here. So total was opportunity was somewhere around 9-ish. Looking for my other trade. Oh, here we go. Yeah, so this one is just example of the WMB3. This one is on Tesla. So here's where Tesla closed Friday. Here's a gap down. There's a harsh sell-off. You can see the MACD harsh winter. Let me scroll down a little bit. So here's where it goes oversold, right at the gap. You know, at the open, this thing is now oversold. So now the first criteria of the WMB3 is in play. So now I read up. I'm looking for an uptick on the MACD histogram, which happens here. That's the first uptick. So now I can read straight up. Now I can put my my standard entry just above that one. It gives me an entry on the next bar. Now here's a choice that you can make. This is like a $2 stop in Tesla, which is close to the R10, and it's at the bottom of the dragon. If you go to the bottom of the RL10, you end up getting a $4 stop. Either one of those is fine. You just take the PSAR exit. So it's a question of, did you get 1, 2, 3.5, or 1, 2-ish. So it exits at 215. You entered at 207. So you made +8. So this one is a 4R win if you use the dragon, and a 2R win if you use the belly of the RL10. So standard WMB3. 3-minute charts, standard work. I wanted to share Mark's work out of the foundations course. So he's about 3 weeks into the foundations course. He's been trading forward with skin in the game. His first 100 trades. His best win was 2. His worst loss was -0.9. He's got 59 wins, 39 losses, 2 scratches. So he has about a 60-40 win rate, which is 3-2. 3 wins for every 2 losses. And his average win is 0.63. His average loss is -0.52. So that's about a 6-5 payoff. And if you just take the extra 1 here to pay for the commissions, he's got basically a 1-to-1 trade-off. So he's got a 3-2 win rate and a 1-to-1 trade-off. How often do you want to win 3, lose 2 for an equal payoff? How many times do you want to trade that? Forever. That's much better than Las Vegas odds as the house. So it's worth computing your system quality number for that. His histogram has no losses, greater than -1. From -1 to +2, it's a standard normal looking curve with positive expectancy, so that's good. His scatter plot shows routine performance and tight discipline. The only thing that's missing is item number 3. He has no fat tails beyond 2R. So what we've got to do is take a look at giving back less on his abnormal wins. And when you look at those 100 trades, there were opportunities to do that. And we can also think about, by tightening up the capital preservation on routine trades, we want to try to move that histogram 0.25 to the right. If we can do that, he's got 100 trades. What if on 40%, in other words, just 4 out of 10, he's able to make a 0.25 R improvement? That's the equivalent of adding 10 more R, because 40 trades times 0.25 R improvement gives you another 10 R. So rather than try to find a 10 R win, simply by improving his performance routinely, losing a little less, preserving a little more, he should be able to manufacture another 10 R out of that, and that's going to make his NSQN, which is respectable, look really, really good. So that's pretty good work for 3 weeks into the Foundations course, and posting his charts and getting feedback and asking great questions during office hours in the Foundations course. So well done to Mark. All right, let's take a look at the traders. All right, this is George. This is Tesla. This is the big gap down, and he's on 5-minute charts here. Now, you got leg 1, a hump, leg 2. So this is an SSC. When this doesn't work, we should be out here when it breaks through the dragon, not waiting for the collapsing dragon exit, because I actually want to be short not later than there. And then I'm going to make money on this one because it just started to go into the winter. So that's actually a stop and reverse. Remember, the SSC doesn't work. You don't believe in it. When that breaks, that is your collapsing dragon entry. So if that's your collapsing dragon entry, you don't want to wait for the best entry signal on our favorite pattern to get out of a trade that we don't believe in. That means that you've got to be prepared to exit in here and then cash that one violently. Then when this doesn't collapse, you can take this trade. I think I want my risk either here or there, and then I'm not going to lose money on that trade, and I take that one again, because you have this, and this was a lower high. That's actually a COTA 2 entry to the downside, and you won't lose money on that one. Now, you were positive expectancy on that one, but that's there's more available. Tesla Part 2. And this is still on the 5-minute. There's his collapsing dragon. Hulk smash. Now we got to get out right here. Not here, because that's another whole R altogether, and that's where we got to be long. So we should be getting that trade. We should be more ruthless here, even though we enjoyed probably maximum favorable excursion of 4R. We gave almost 2R of that back. We only want to give 1R of that back. I wanted to come back to this. I think we're going to. Were we going to see this one again? Yeah, this was another one of George's trades where he gets this trade for 1.8, which is an excellent trade. But that same symbol had a big gap down, OR3, short, fails to collapse, so we cut it here and we make a little bit. And then the routine SSC on a standard risk box gives us 2R battle drill, routine exit. So we make 3R on this one, 1R on that one for a total of 4R to accompany a 2R. So there was an additional 4R reasonably available in, I think this was Tesla again. I may be wrong. On this gap down and reversal, when we're starting to look for that trade, the places we're looking for a recovery is it has to get above the high of the day, so that's good. And then a closing of the gap, and then the previous hump in the dragon up in here. So as you're trying to figure out where your profit targets are, this is like a move to Z plus 1 from this move up in here. So if you can get here, that's a pretty good move. Tim is continuing to crush it. He has reduced his target list, and he's finding the movers with his TradingView infrastructure. So he's built a complete set of our tortoise trading indicators now for TradingView. So now he's able to find the movers, gets his standard entry with a routine risk, locks in gains, comes back and locks in 3.2R, and then takes the rest of the day off. And his position sizing, he was using 2 times the R10, so it's not even a exaggerated tight stop. He's done some nice work there. Now, in Alcoa, he gets the gap down, sell off, short, cashes, waits for the COTA 2, gets paid, tries the short, takes a half an R, re-enters on the breakout, smashes for a total of 2.4, 5.5 for the day. When he's not aligned with price, notice I didn't say when he's wrong. When he's not in alignment with the price, his loss is minus 0.6. When he is aligned with price, he gets paid 1.4, and that's with giving it room to run. And he's not getting chased out by the noise. He's letting the PSAR do the job. And he nets 5.6 for the day. So really nice work for Tim. This was the other one for George. All right, so this is Alcoa on 30-minute charts. I think what you have here is a big gap down. There was a nice morning hook in here. Then when this rolled over, you got short and then scratched. And that's reasonable. But I'd like to be able to see you get some of this. That failure to fail further is a coming back to resistance. which was once support. This is supposed to, I want you to think about your psychology here, where you've got zero point 0.3 in hand, and you're willing to let that go to minus zero point 0.7. If you do that, that is your SSC long, and then this would pay for that. But remember, when this collapsing, this is supposed to collapse big time. It did not. We let that come all the way back to here, a full adverse 1.0, which is larger than your average win. And I just think we're not reading this correctly in here. On the other hand, that's the other one we looked at. That's the move. IYR is a special. That's what it was. It was IYR. IYR is special because that's U.S. real estate. And it's an ETF. This is the opposite of sexy tech. And look how nice and orderly these moves are. That is as orderly as you could want. And when this does not fail further, and after that big gap down, that's what a morning hook looks like. And it got right back to where it closed. And then when that failed, now that is a perfect short. Nice. That's the one that was 1.8, but we just saw that there was another 4R in here, not even counting that one, which we said was probably a scratch. Here's Mark. And this is Mark. This is not even part of his initial 100. And this is 7.7 before slippage, 6.4 after slippage. So 1.3 divided by 7.7, that's 6. That's 1/6. So he's experiencing about 15% slippage in forex. Maybe that's an issue for the broker. But this is on 3 minutes. And I think when this breaks through this tight channel and you've got 1, 2 in hand, that's the 2R battle drill. That covers your slippage. This is a great re-entry. This is good discipline. That's a great reversal. That's how you do it, guys. Really well done. Had never traded this style 4 weeks ago. So there might be something in that foundations course for you. Here's Brian on the Kiwi. 5 minutes. Gets paid, re-entry, gets paid, doesn't take that. After that Z3 excursion, you could almost see that as a fake one go to. So we could be short and you probably cover and then re-enter, probably cover. And you'd have to, I would think with your style, that's probably 3 pieces. But this is beautiful. And maybe there's a Kata 2 in here as well. So that's not even close to being optimized. And he nets 1 and still looking good on all his performance overall. So there was a little bit of performance lag today. But getting paid to learn. That's good work. Finally cleaned up the cover page on the daily. So we've got all these things in white are kind of like the market context to help you understand what's going on. These ones in the dark blue, These are directly actionable signals. On the dashboard, the tactical have the mechanical swings plus all the intraday stats. You got the auto framers and the daily squeeze in there, and then a few more on helping you identify targets, and then more on seasonality and setting conditions with market classification. So these are your directly actionable signals. So this is the cover page. That's where we summarize the sniper trade of the day. These are the 3 looks at the S&P. The 150-day look back on daily bars, the 30-day look back that zooms in on daily bars, and then the 30-minute bars, 10 days on 30-minute bars that supports the hybrid. We've already seen that one. So where are we in the 150? This was kind of bad news today. This breakdown, this is an important break right here. And this is where all of today's price action is. We are within spitting distance of this very solid support level. But you can see we've had 1 leg down, 2 legs down. That third one is starting to look painful with lower highs. It won't take much for this to collapse. And then I'll tell you, if 407 breaks, look out below, because now you're all the way back to the 150-day low from 455 all the way down to 395. So that's a minus $60 move on $455 instrument. That's that. If it gets down to here, that's minus 12.5%. Quick math. We're right at about a 10% sell-off. So this is a really important test. Is this just a correction? The classic definition is it would start to look like bear territory down here. Now, we already know that because we're in sideways quiet channel. But that's what the 150 looks like. Pretty gloomy longer term. The 30-day look back, again, you can see how this rejected the Bollinger Band mean, so that is staying in force. And now the dragon is rolling over, and the 30 is rolling over. That makes any breakdown below here an owl entry, which is our most conservative short side estimate. Here's where the P1 occurred. The 30 or the RL10 crossing the RL30. And there's where our PSAR flip happened. And here's where the R10 break, the collapsing dragon, happened here. So again, you can see that the collapsing dragon, the series on this is that K2s happen earlier, and then collapsing dragons, and then owl entries. So you can use those patterns as indicators for market conditions. Nothing wrong with that. The 30-day or 30-minute bars, again, closed very poorly. And you can see why this is going to be a really significant test tomorrow. If that breaks, look out below. Sideways volatile, the most chaotic moment of all. Volatility is rolling over on the risk Z. Most everything oversold. A trivial recovery. The U.S. indexes are signaling potential buy on dips. But look at how many things are below their 200-day moving average. The Dow Tactical, sorry, the tail of the tape, so many 5DDs, which is the best mechanical swing entry when it works on the long side, but the failure works even better in sideways and bear markets, particularly volatile markets. So we got to be ready to be short any of those things if they collapse further. And then Chevron and Intel were the two big percent losers today. So if they start failing again tomorrow, you're not allowed to be surprised. And look how many symbols are breaking the look back period lows. 10-day, 1 month, 3 months, 6 months. There's some real serious weakness in there. A lot of things in the RSI2 single digits. And the ETFs are the same condition. Everything getting smashed. So we got to get that piece right. We're back into being dominated by winter. The NDX shows you where all the pain and suffering is. Trading value list. Top 5. Marijuana, Tesla, clean energy, uranium, Nvidia. Good list. KRE and Intel were both shorts that I was willing to hold overnight, so I'm hoping to see some large volatility on those. All right, that's everything for today, guys. We'll catch you tomorrow and be ready for action. Tomorrow's prime time trading day. Take good care, and we shall see you tomorrow.